Imagine you're running a creator business pulling in $70,000 or $80,000 a year. You've got an LLC set up, you're doing everything by the book, and then at tax time you realize you just handed the IRS over $12,000 in taxes you might not have needed to pay. That's the reality for thousands of solo creators right now. Here's what I'm going to show you in the next 15 minutes. The exact moment when switching from an LLC to S-Corp tax status starts saving you real money, how to calculate whether it's worth the extra hassle for your specific situation, and the step-by-step process to make the switch without screwing anything up. We'll run the actual numbers so you can see the savings in dollars, not theory. Let me tell you about Maya. She's a YouTube creator who started her channel 3 years ago making design tutorials. First year, she made $18,000. Set up an LLC, kept her business and personal money separate, filed her taxes as a sole proprietor through the LLC. Simple. Second year, $42,000. Still manageable. Third year, she hit $85,000 in profit after all her expenses. At tax time, her accountant sat her down and explained she'd just paid nearly $13,000 in self-employment tax alone. Not income tax, self-employment tax. And he asked her a question. Why are you still taxed as a sole proprietor? Maya had no idea there was another option. She thought LLC was the final answer. It's not. Here's why this matters right now. If you're a solo creator, freelancer, consultant, or anyone running a one-person business, you probably started with an LLC because everyone said it protects your personal assets. That's true. But what most people don't tell you is that an LLC is a legal structure, not a tax structure. By default, if you're the only owner, the IRS treats your LLC like a sole proprietorship for taxes. That means every dollar of profit gets hit with self-employment tax, which is about 15.3%, covering Social Security and Medicare. On top of your regular income tax. Once your profit gets into the $50,000, $60,000, $80,000 range, that self-employment tax becomes a massive chunk of your money. The S-Corp election is a way to legally reduce that bite. So what exactly is an S-Corp? It's not a different business entity. You keep your LLC. An S-Corp is a tax election. You file one form with the IRS, Form 2553, and suddenly the IRS treats your business differently for tax purposes. Instead of all your profit being subject to self-employment tax, you split your money into two buckets, salary and distribution. You pay yourself a reasonable salary as an employee of your own business, and that salary gets hit with payroll taxes just like any job. But here's the key. The leftover profit, the distribution, is not subject to self-employment tax. You still pay income tax on it, but you skip that 15.3% self-employment hit. That's where the savings come from. Let me break this into 3 clear pieces. First, what is it? An LLC is your legal liability shield. It keeps your personal house, car, and bank accounts separate from your business debts. If your business gets sued or owes money, your personal stuff is generally protected. An S-Corp is a tax choice you layer on top of that LLC. You're still an LLC legally, but the IRS taxes you like a small corporation that passes income through to you. Second, how you earn. In a default LLC, every dollar of net profit flows to your personal tax return and you pay self-employment tax plus income tax. With S-Corp status, you earn through salary, which has payroll taxes, and through distributions, which skip self-employment tax. Third, how to invest. You keep more money after taxes, and you can reinvest that savings into growing your business, funding retirement accounts, or building wealth outside your business. Let's talk about how people actually use this to build wealth. Strategy 1. Retain more profit after taxes. Let's say you're making $80,000 in profit. As a default LLC, you pay about $12,000 in self-employment tax. As an S-Corp with a $50,000 salary, you pay around $7,650 in payroll taxes on that salary, and the remaining $30,000 in distribution has zero self-employment tax. That's roughly $4,600 in savings, minus the cost of running payroll and extra accounting, which might run you $2,000 to $3,000 a year. You still net an extra $2,000 or more, and that's money you can invest. Strategy 2. Maximize retirement contributions. Once you're on payroll as an S-Corp, you can set up a solo 401k or SEP IRA and contribute based on your salary. That can mean bigger deductions and more long-term wealth building. Strategy 3. Timing the flip. Most smart creators start as a default LLC when business is small and messy. No extra admin, no payroll headaches. Then, once profit is consistent and above that 50 to 60,000 range, they flip to S-Corp status. You avoid complexity early and optimize later. Strategy 4. Tax planning with other income. If your creator income is your main gig, modeling your total tax picture including state taxes, income brackets, and deductions helps you figure out the exact salary and distribution split that keeps the most money in your pocket. Strategy 5. Combining liability protection with tax efficiency. The LLC gives you the legal shield, the S-Corp election gives you the tax edge. Together, you've got a setup that protects you and maximizes what you keep. Who is this best for? Let's get specific. If you're a solo creator earning $50,000 or more in net profit and you expect that to continue or grow, S-Corp status is worth investigating. Many tax advisors use $50,000 as a rough threshold because below that, the admin costs and complexity often eat up the tax savings. If you're in the $30,000 or $40,000 range, the juice might not be worth the squeeze. But if you're at $80,000, $100,000, $150,000, the savings can be thousands of dollars a year. You also need to be okay with extra admin. That means running payroll, even if you're the only employee. Filing a corporate tax return, Form 1120-S. Issuing yourself a Schedule K-1. Keeping tighter records. If the idea of payroll makes you want to hide under your desk, maybe stick with the default LLC until you're ready or can hire someone to handle it. Time horizon matters too. If you're building this business for the long haul, multiple years, the S-Corp setup pays off. If you're doing a one-time project or your income is wildly inconsistent, the default LLC might be simpler. Risk tolerance and admin comfort. You've got to be cool with following IRS rules on reasonable salary, keeping separate accounts, and dealing with the possibility of an audit if you mess up the salary distribution split. And finally, your tax bracket. If you're in a higher bracket, saving on self-employment tax is more meaningful. If your total income is low, maybe the standard deduction and lower bracket mean you don't save much anyway. Let me give you a worked example with real numbers. Base case. LLC taxed as sole proprietor. You run a creator business, let's say YouTube ad revenue, sponsorships, maybe some digital products. Your revenue this year is $100,000. Your business expenses, equipment, software, contract help, travel, all that, add up to $20,000. Your net profit is $80,000. As a default LLC, you pay self-employment tax of about 15.3% on that $80,000, which is around $12,240. Then you pay income tax. Let's assume you're in the 22% bracket for simplicity. Income tax on $80,000 is about $17,600. Total tax. $12,240 plus $17,600 equals $29,840. Your after-tax income is roughly $50,160. That's what you keep. Now, risk case. Same business, same $80,000 profit, but you elect S-Corp status. You decide on a reasonable salary. Let's say $50,000. You pay yourself that $50,000 as an employee. The salary gets hit with payroll taxes, which include your share and the employer share of Social Security and Medicare, roughly 15.3%. That's about $76.50 on $50,000. The remaining $30,000 is your distribution as owner. That distribution is not subject to self-employment tax. You still pay income tax on the full $80,000, salary plus distribution, because it all flows through to your personal return. At 22%, that's still $17,600 in income tax. So your total tax as S-Corp is $76.50 in payroll tax plus $17,600 income tax, which equals $25,250. After-tax income. $80,000 minus $25,250 equals $54,750. Compare that to the $50,160 you kept as a default LLC. You just saved $45.90. But hold on, you've got extra costs. Payroll services might cost you $100 to $200 a month, so $1,200 to $2,400 a year. Accounting fees might be higher, let's say another $1,000. Total extra costs may be $2,500 to $3,000. Your net savings after costs is still around $1,500 to $2,000. That's real money. Sensitivity check. What if your profit is lower? Let's say your profit drops to $60,000. You still set a salary at maybe $40,000. Payroll tax on $40,000 is about $61.20. Distribution $20,000. No self-employment tax on that part. Income tax at 22% on $60,000 is $13,200. Total tax. $61.20 plus $13,200 equals $19,320. As a default LLC on $60,000 profit, self-employment tax is about $91.80, income tax $13,200, total $22,380. Savings as S-Corp is about $30,060, minus extra costs of $2,500, net savings around $560. At $60,000 profit, the benefit shrinks. If profit is only $40,000, you're probably break even or losing money on the deal because the fixed costs don't go away. That's why the threshold matters. What if you go the other direction? Your profit jumps to $120,000. Salary $60,000, distribution $60,000. Payroll tax on $60,000 is about $91.80. Income tax on $120,000 at let's say 24% bracket is about $28,800. Total tax $37,980. As default LLC on $120,000, self-employment tax is about $18,360, income tax $28,800, total $47,160. Savings with S-Corp. About $91.80 minus $2,500 costs, net savings roughly $66.80. The higher your profit, the bigger the savings, as long as your salary stays reasonable and doesn't eat the whole profit. Here's the catch with reasonable salary. The IRS says you have to pay yourself what someone doing your job would normally earn. You can't pay yourself $10,000 and take $110,000 in distributions on $120,000 profit. The IRS will challenge that, reclassify your distributions as salary, and hit you with back taxes and penalties. Reasonable means industry standard. If you're a freelance consultant and similar consultants make $60,000 a year, that's a reasonable salary. If you're a YouTuber and there's no exact comp, your accountant will help you figure out a defensible number based on your role and hours. The rule of thumb many use is somewhere between 40 and 60% of profit as salary, but it varies. Let's talk about when to avoid this. If your net profit is below $40,000 or $50,000, the admin burden probably isn't worth it. If you can't handle payroll, even with software, and you don't want to pay someone, stick with default LLC. If your income is super inconsistent, one year $80,000, next year $20,000, the S-Corp election locks you into obligations even in the low year, and the benefit disappears. If you're in a state that charges extra franchise taxes or fees for S-Corp, factor that in. Some states don't recognize S-Corp the same way or they tax them differently, so your savings federally might get eaten by state costs. If you want maximum flexibility in how you allocate profits, like if you plan to bring in a partner or investor later, S-Corp rules are rigid compared to LLCs. And if you're not comfortable keeping pristine records, the IRS scrutiny on S-Corp is real. Mess up your payroll or salary, and you're inviting an audit. Biggest pitfalls. Underpaying your salary. People get greedy and try to minimize salary to maximize distribution. The IRS is onto this. If they audit you and decide your salary was unreasonably low, they'll reclassify distributions as wages, charge you back taxes, penalties, and interest. Not fun. Another pitfall. Missing the Form 2553 deadline. You have to file it within 2 months and 15 days after the start of the tax year to have S-Corp status effective for that year. Miss the deadline, you're stuck for the whole year. Third pitfall. Not running actual payroll. You can't just skip payroll and write yourself checks. You need payroll software or service, withholding, quarterly filings, the works. If you ignore that, you're breaking the rules. Fourth. Ignoring state requirements. Some states require separate S-Corp filings or have annual fees. 5th. Commingling funds. If you mix personal and business money, you risk piercing the LLC veil and losing your liability protection, S-Corp or not. Costs and taxes breakdown. Simple rules of thumb. Forming an LLC costs anywhere from $50 to $500 depending on your state. Annual renewal fees vary. For S-Corp election, there's no IRS fee to file Form 2553, but you'll likely pay your accountant a few hundred to help. Payroll costs run roughly $100 to $200 per month if you use a service like Gusto or QuickBooks Payroll. Accounting fees for filing Form 1120S and your personal return might be $500 to $1,500 more than you'd pay for a simple Schedule C, so total extra annual cost for S-Corp is maybe $1,500 to $3,000. The tax rule. Default LLC means you pay 15.3% self-employment tax on all profit up to the Social Security wage base, which in 2025 is around $168,000, and then 2.9% Medicare tax on everything above that, plus an extra 0.9% if you're high income. S-Corp means you pay that 15.3% only on your salary portion, not on distributions. The break-even point is roughly when your profit is high enough that the self-employment tax saved exceeds the extra admin cost. $50,000 is a common rough threshold, but run your own numbers. Getting started. 7-step checklist. Step 1. If you don't have an LLC yet, Form 1. Register with your state, get your articles of organization, create an operating agreement, get an employer identification number from the IRS, open a business bank account. Step 2. Maintain separate finances religiously. Business money in business account, personal money in personal account. No mixing. This keeps your liability protection intact. Step 3. Track your profit carefully. Use accounting software like QuickBooks or Wave. Know your revenue minus expenses, your net profit. Step 4. Evaluate if your net profit is consistently above $40,000 or $50,000 and likely to stay there or grow. If yes, S-Corp might be worth it. Step 5. Consult a tax professional. Do not wing this. Pay someone to help you determine a reasonable salary and model your specific savings. Step 6. File IRS Form 2553 by the deadline. For most people, that's within 2 months and 15 days after the start of the tax year. If you want S-Corp status for 2026, you'd need to file by mid-March 2026. Some folks file late election relief if they miss the deadline, but don't count on it. Step 7. Set up payroll. Use a service or software. Pay yourself that salary regularly, withhold taxes, file quarterly payroll tax forms, issue yourself a W-2 at year-end. File Form 1120S for your business and a Schedule K-1 for yourself. Keep clean records. Done. Let's recap this with a new angle. Remember at the start, I asked you to imagine handing over $12,000 in taxes you didn't need to pay? Now you understand that money isn't disappearing because of your income, it's disappearing because of your tax structure. The IRS gives you a legal way to split your income into 2 pieces and only pay self-employment tax on one piece. That's what S-Corp status does. It's not a loophole. It's not shady. It's a legitimate tax election that Congress created for small business owners. But it comes with strings. You've got to follow the rules, pay yourself fairly, handle payroll, and keep your records tight. The moment this makes sense is when your profit is high enough that the tax savings clearly outweigh the hassle and cost. For most solo creators, that's somewhere around $50,000 and up. Below that, the default LLC is simpler and probably smarter. Above that, you're leaving money on the table if you don't at least run the numbers. The key insight is this: your business structure and your tax structure are not the same thing. You can have an LLC for legal protection and still choose how it's taxed. That choice, when made at the right time, can save you thousands of dollars a year, every year. That's money you can reinvest, save, or use to build the life you want. The question isn't whether you should flip to S-Corp status. The question is, are you at the point where it makes sense yet? Quick FAQ. Can I start with an LLC now and pick S-Corp status later? Yes, most people do exactly that. Form the LLC, run your business, and when profit gets high enough, file Form 2553. What is a reasonable salary? It's what someone in your industry doing your job would typically earn. There's no exact number, but your accountant can help you defend it. Will S-Corp status save me taxes automatically? No, only if you structure it right, your profit is high enough, and you handle the admin. Does being an S-Corp change my liability protection? No. You keep the LLC's liability shield as long as you maintain proper separation of business and personal finances. What if my profit drops after electing S-Corp? The election stays in effect unless you revoke it. If profit drops a lot, the benefit shrinks, but you're still stuck with the admin. Do I still pay income tax on distributions as an S-Corp owner? Yes. Distributions are not subject to self-employment tax, but they are subject to income tax. Are there state-level issues I need to worry about? Yes. Some states have extra fees, franchise taxes, or different rules. Always check your state's laws. Does this apply if I have multiple owners? Yes, but it gets more complex. The solo creator scenario is simpler. What if I miss the Form 2553 deadline? You might be able to file for late election relief, but it's not guaranteed. Don't miss it. This is educational information, not financial advice. Tax laws are complex and change. Your situation is unique. Always consult with a qualified tax professional or CPA before making any business structure or tax election decisions. This video is meant to help you understand the concepts and ask the right questions, not to replace personalized advice.